So in this video, I want to break down how critical levels and moving averages can literally guide you to making some of the best trades that you're ever going to make, right? It's going to get rid of that confusion, that tunnel vision, right? It's going to help you understand and start to actually react to the market information instead of predicting, right? I'm Joshua Salvetti. I've been trading for over 6 years, right? And I spent a lot of that time struggling. I spent a lot of that time showing up to the market and not making good decisions, right? Not because I was a bad person or because I was stupid, right? It's because I was ignorant. I was ignorant to the information I actually needed to put on consistent trades. I was ignorant to a consistent approach. I was ignorant to a systematic, repeatable, and effective day trading strategy, right? So today in this video, I want to show you what it is that helps me make these better decisions in the market. Right, so the day we're going to be talking about is September 12, 2024, right? And I approach every single day the exact same way. Well, what is that way, right? I identify my pit numbers, my critical levels. This is end of day, previous day high, open print in previous day low, right? Because I'm an intraday day trader, so I must watch and be objective to what the previous pit numbers were. That's the previous day open, low, close, and high, right? These levels hold massive amounts of liquidity. So if it's my job to understand what large money's doing, I have to watch these levels, right? So check it out. We have end of day over here established at 554.35. We have previous day high established over here at 555.27. And what's crazy is previous day high and end of day literally were the exact same price, right? So anytime you have a critical level that is matching up with another critical level, right? Here's previous day high, right? I'll make a little zone here. Here's open print, right? This is what we call a super important level of interest, an area of value, right? It's an area on a chart that's going to give us value because it's going to help us understand who is in control of the market, right? We can't move the market. The banks do. So it's up to us to identify who's in control of this level. And it's up to us to trade this level with managed risk and managed reward, right? We'll get into that in a little bit, right? So my goal going into this day, right? Let's just break down the bullish and bearish scenario. Right, so let me pull up the Discord here and I will show you what we posted here in the Discord. Anyone that wants to join the team, check out the links below. High Performance Trader is a Discord built by the retail trader for the retail trader, right? This Discord is literally a place where you can come, learn our principles, learn our understanding, learn the knowledge it takes to actually see consistent results, right? There's a lot of Discords out there that I can't speak on, but this Discord is filled with nothing but knowledge, information, and resources, in teamwork and camaraderie, right? So that every trader can come, be unique, and actually learn the principles, the precepts that we use over here to generate consistent results in the market, right? So click the links below if you want to get involved. Right, so pre-market plan. Let's come over here. This was the 12th. Check this out. September 12, 2024. 555 is a critical level from last week. This is SPY pre-market analysis. Bullish scenario. End of day and previous day high are relatively close to each other. Equal sweet spot, right? So watching to see who controls EOD in previous day high sweet spot today. Buyers step up here and control open print and maintain a healthy 1 hour trend. I'm looking for long plays targeting 557.18, 560 all-time high, right? Here's a little graphical presentation of the sweet spot and who, if buyers control it, these are my upside targets. If sellers control it, here's my downside targets. See, I'm a very firm believer in a clear message, a clear understanding, meaning I want my clients to view this day as whoever controls the sweet spot, I'm looking to trade with. And if buyers control the sweet spot, I'm looking to target this level, this level, this level. If sellers control the sweet spot, I'm looking to target this level, this level, this level, right? Very clear, right? Bearish scenario, we're a bit extended from the 1 hour 50. If sellers show strength off EOD and PDH, sweet spot, along with bearish structure off open print, I'm looking for short plays targeting XYZ, right? Once again, graphical presentation. And I was really focused on the level 555. Right? Because from the previous week, you could see, look at how this level played such an important role in price action. Look at the market structure. Buyers control it here, They lose it here, sellers control it. Now we're revisiting this level. So any acceptance above this level is very bullish, right? And then we do QQQs, right? But I'm just going to focus on SPY. So real quick here, let me just pull, or actually here, this is what we're going to do. I'm watching this 555. We're coming into it, right? And my first target here was 557.18. So let me just get rid of this like that. Pull this guy, first target, 555.17. And then my next target was this level right here, way up. Or no, I'm sorry. Next target was this level right here, which was end of day from that day. Notice, see how I pull targets from previous day end of days, right? I'm literally pulling a target here from 8/29/24, right? There's an end of day that day. There's tons of liquidity at that pit number. So if buyers control this level, that's the next upside target. Okay, so now let's break into the 5 minute. I took 2 trades this day, right? So once again, I'm looking to see who can control that sweet spot, and I'm going to be using the 1 hour time frame to pretty much gauge downside moves and upside moves, right? So in the morning here, we got some selling off open print, and then we fall below end of day. I did not capture any of that because I knew this level was very important. I wasn't just going to take the first trade that I seen on the 5 minute time frame, right? And that's another thing that we have to be able to do as traders. We have to be able to accept the fact that to make the best trade, sometimes we have to miss out on a trade. That's completely fine. Just because you see a setup that actually works in front of you doesn't mean you have to take it, right? Sometimes it pays you, right? It serves you to be patient and allow the trade to happen and not be a part of it, right? This actually gives you a better understanding of market conditions. This gives you a better understanding of self-control. This gives you a better understanding of self-discipline and the mentality it takes, right, to actually become a consistently profitable trader, right? So don't be afraid to miss a trade, right? Learn to miss a trade. FOMO is the #1 retail trader killer, right? So to become a trader that can actually restrain and control himself from certain price action, right? It takes a certain level of self-discipline, and that is what it takes. Being able to watch a setup happen. Look at these sellers defending open print. Price opens below the 50 EMA, right? Sellers reject the cloud, right? This would have been a really good trade to the downside. I wasn't a part of it. I didn't like how far away my downside target was. And more or less, I was more willing to be patient and see how the day played out, right? So check out the price action we start getting, right? We get this back and forth price action in between end of day and open print. And there really isn't any, what I want to say, good setups, right? Price is just going back and forth. We get a bit extended from the EMA cloud. So anybody that watches my videos know I use moving averages very, very strictly. Meaning if I'm extended from my moving averages, I do not trade with that trend. That's what I call unhealthy trend, right? An unhealthy trend is anytime you're very extended from a moving average, right? I like trades that are not extended from the moving average. So I wasn't trading any of that. I was being patient. And then I finally took my first trade right here off open print. So we were getting a lot of back and forth price action. And then we fell down below the 50. We came up, we retested the 50 EMA and the EMA cloud, right? And you're also going to notice the crossover here. You get the crossover from the green cloud to red cloud. You get the retest of the 50 EMA. At this point, I'm in the market short, targeting end of day, and then targeting low of day, right? So that was my first trade. Entered short, scaled out at end of day, and then price started to reverse. And on this candle, I got out of my remaining 20%, right? So great trade, great setup, just didn't follow through the way I wanted to, but still captured more than $1 move, right? That was a good trade. And my second trade, after getting stomped out and exiting that short play, I'm now asking myself, right, what just happened? Who just defended end of day? Look at this large green candle, right? Buyers showed up extremely strong, right? So now I'm going to watch to see how price reacts to open print because we still have these large upside targets of 5 high of day and then 55712, right? So since sellers couldn't control end of day and bring price lower, I now flip my bias to bullish, right? So now I'm going, okay, if I can identify a good entry off open print, I'll take the market long, targeting upside targets. And right here on this candle, let me whip out the 2 minute because I'm going to show you how the red bar ignored helped me get in this trade. So this was right here. So we took the market long on this candle right here. I took the market long on this candle when price action looked like this. We have open print. We get that nice cross above the 50. Price comes into the 50. Buyers hold it. So now I'm looking for a red bar to be ignored. In this right here, this red candle had a high of 55548, and this candle had a high of 55548, and we closed right above it. I'm sorry, the high on this candle was 55547. So we actually beat this candle by 1 cent, and we closed above it. Even if it's 1 cent, that's still a sign of strength. So at this point, I'm willing to enter the market long, right? You're going to see this was the trade that I took. My entry on SBX, I bought my contracts for $100 and sold them for $295, right? So this trade had a 208% ROI, right? And this was my entry, that was my exit, right? So you're gonna see I entered right here on this candle, and my stop loss goes below this guy, right? My stop loss has to go at a spot where I know if sellers bring price down below 555, which was our critical level from pre-market, I'm gonna want to get out of this trade. I need to see buyers hold it, defend it, and show strength at this level, right? So I'm gonna put my stop loss right here, and then my upside target's gonna be high of day, and then 55717, I think. Yes, 55712. Took the market long, and then price came down, rips into the 50, right? Once again, not afraid. I'm letting this play out. Buyers come in, almost stop me out of my trade, and then this thing rallies all the way up to high of day, and then 55712, right? So guys, I hope this lesson helped you understand how to trade the critical level, right? How to use the critical level to gauge the market conditions, right? And especially on days like this where you're going to get chopped, don't defer from your strategy, right? Be patient, right? Understand that a large move may happen today, and if it's going to, what do you need to see to capitalize on it, right? So I hope you guys enjoyed this lesson. If you guys want to get involved with the team, click the links below. I'll see you in the next lesson.